Revival Today Church. We know some of you are moving, we know some of you are interested in moving, and we want you to know we put a special package together just for you. What I want you to do is go to revivaltoday.com/moving. Fill out that form, and then once we get that form, we'll send you a special package that's full of resources to help you get to know Pittsburgh. We're so excited. We know you are so excited, and we can't wait to see you at Revival Today Church.
We need more of that. Let him feel it today.
Good morning, everybody. Ninja Buddha, welcome. First, good morning to you. How's it going? Everybody ready for Check the Market? Christopher got his coffee, ready to check the market from Indianapolis. Let me know where you're watching from. I always like to see where everybody's watching from. Christopher is from Indianapolis. D&D Investments from Portland, Oregon. We got Ram and Brennan watching from Pittsburgh, Pennsylvania. Outside of Pittsburgh, Pennsylvania. Were the batteries empty? Markets. Let's take a look. Cryptocurrency. What happened here? Oh, there we go. Bitcoin, 65. Look at that. Man. That was beautiful. South Dakota, the free state of Texas. Good morning, Scott, Julia, Kevin. When's the next crypto special? I was actually thinking of talking to Doug, see if we can do something here tomorrow. I'm not sure if he has time, but I'll text him later. Because we need to do a crypto special with all the crypto... My goodness, I just lost my train of thought. The movement we have in crypto, I guess. Thank you. Good morning from Wisconsin. Jeff, thanks for tuning in to Check the Market. Make sure you share the broadcast. A great third quarter for Tesla, but people aren't happy with it for some reason. I'm not sure what's going on there. Wall Street always expects these huge beats, these huge earnings beats. That's why you can't trade on earnings anymore. Because they always expect these huge earnings beats, and then they're okay earnings beats, which are still earnings beats, but the stock goes down. Thank you, I appreciate that. Got more of a fall vibe here today. what all the kids say nowadays.
He said, his body flooding with estrogen.
You got me. Oh, man. Good morning, Sandra and Missy. Tesla down almost 1%, even though it had great earnings. Oh, we're moving up now. And then paying for real estate and Bitcoin. We'll go over all of that today. We got some inflation news. So let's get into it. See what's going on. Tesla third quarter earnings recap. Revenue up 57% to 13.8 billion. Model Y production on track. Still holding Bitcoin. DWAC, the SPAC that's merging to do the truth, up 31%, 32%. My thoughts. People are going to be trading it on the hype. So, I mean, if you can probably make some good money out of it, but until the platform actually comes out and to see how many subscribers it has, what's revenue going to be like, things like that, I wouldn't look at it as a great investment, a great company to invest in, because there's no company as of yet. So it's just a SPAC at this point. But that's, DWAC. So it's just moving on the news right now. We'll see what happens. How many subscribers is it going to have? What kind of interest is that platform going to have? What's actually going to happen? That's what I'm waiting to see before I put money. So it's definitely short term at this point, not long term. I appreciate that, Jeff. That made my day. Yep, make a little while you can, absolutely. All right, Tesla's third quarter. Electric vehicle company Tesla reported third quarter financial results after market close Wednesday. Here are the key highlights. Reported third quarter revenue of 13.8 billion, up 57% year over year. The revenue figure beat a street consensus of 30.6 billion. Automotive revenue for the company was 12.1 billion, up 58% year over year. Tesla reported third quarter earnings per share of $1.86, beating a street consensus of $1.57, which is a nice beat. The company had record vehicle production and deliveries in the third quarter. Tesla produced 237,000 vehicles, up 64% year over year. The company delivered 241,000 vehicles. Tesla reported 83 megawatts of solar power in the third quarter, up 40% year over year. The company reported 1,295 megawatt hours of energy storage. Reported no purchases of sales of Bitcoin. You're good. Keep going. We achieved our best ever net income, operating profit, and gross profit, the company said. And the stock is... Thanks, Nick. The stock is now up 0.38%. Usually when there's an earnings beat like that, when a company has its best ever net income, operating profit, I would expect the stock to go much higher. That's where I've got burned when it comes to options trading, because I would trade options on earnings and the company would have stellar results, but for some reason the stock drops. It makes no sense, but that's why it's become very hard to trade on earnings. It used to be a little bit easier because everybody is so emotional about the stock market, I guess. So even if it's a great earnings beat, it's not what they'd expected. They wanted the company to sell 700,000 vehicles, which to have that kind of an earnings beat, I mean, that's not feasible. So that's why you need to be careful when trading options on earnings. Thank you, Tamara. I appreciate that. Good morning, Naveed. Welcome. Now we're almost up 1% on Tesla. So it looks like we're turning the page here. What's next? Tesla said it sees 50% average annual growth on a multi-year horizon. Growth will depend on equipment capacity, operational efficiencies, and stability of the supply chain. We believe the more vehicles we have on the road, the more Tesla owners are able to spread the word about the benefits of EVs, the company said. Which I don't know. Morning, Dave. Thanks for tuning in. My son came up to me yesterday. He's 5 years old. 5 years old. Yes, he's 5 years old. And he started talking to me about Teslas. I don't know where he heard about Teslas because I'm not a big fan of them. We are a German automobile household. And so, yeah, I don't know how these kids are picking up on Teslas, but I guess it's cool. So, Teslas are cool. So I can see that the 50% average annual growth could be a real thing because I guess it must have been a conversation in school or something about Teslas. Next article. PayPal looks to buy Pinterest in $39 billion deal. PayPal getting into the social media space. Interesting. Let's see it. PayPal Holdings is weighing the purchase of the social media company Pinterest, Bloomberg reported, citing people with the knowledge of the matter. Both companies have discussed a possible price around $70 per share, and the deal could value the digital pinboard site at about $39 billion. After the news about a possible acquisition, Pinterest stock was halted twice on Wednesday. PayPal shares were down about 3.5%, while Pinterest shares were up over 10% at $61.55. PayPal shares were down 5.6% at $256.50, while Pinterest shares were rallying by 11% at $61.74. Continue. Last week, Pinterest co-founder Evan Sharp announced plans to leave the company to join Love From. What's that? Sharp founded the online scrapbook and photo sharing platform along with Ben Silbermann. Oh no, that's talking about Pinterest. During the pandemic, PayPal has gained momentum from the large-scale online transactions. With this acquisition, PayPal would now move into the social media e-commerce market space. I think a good move by PayPal, and yeah, I think that would be a great move by them to get into that. Continue. They do have toy car Teslas. He has one of those little Mercedes like ride-on cars. But I did see that they have Teslas, but I don't think that I could get myself to buy one of those for him. Just because it would go against my sincerely held car beliefs. Part of Germany, are you? I am from southern Germany, the Black Forest. I know it sounds kind of grim brotherish, but it's actually a very beautiful place. So south of Stuttgart, a little bit south of Stuttgart is where I'm from, in Germany. It is a weird move for PayPal, but I understand they probably want to create sort of like an Etsy space with it. To have their own like e-commerce platform. So PayPal is not just facilitating payments, but they're actually in the space. So I think it's a good move of theirs. Portillo's is doing an IPO, 20.3 million share IPO at $20 per share. Expects to open for trade Thursday, October 21st, under the ticker symbol PTLO. Let's see if they're trading already. There we go. Delicious. Hasn't started trading yet. You can bid on it on Robinhood, though. So if you're interested, Portillo's. Great food. Continue. All right, next. Tesla in tunnels, project of Elon Musk's Boring Company gets green light to expand in Las Vegas. So the Boring Company, I don't know if you've ever seen the tunnels that they were creating underneath Los Angeles, but it's pretty interesting. They'll have a car elevator that takes your vehicle into a tunnel almost like a subway and then moves you very fast from one space to the other so that you don't have to sit in traffic, which is which is great for, I guess, places like Los Angeles where you always see tons of traffic. Let's see the article. Elon Musk's tunneling enterprise, The Boring Company, has received regulatory approval to build a tunnel-based transportation system under the Las Vegas Strip. The Boring Company took to Twitter to announce that the transportation system, dubbed the Vegas Loop, is expanding and thanked the regulators for their approval. The regulatory approval would enable the company to expand the Vegas Loop system to a 29-mile route with 51 stations. Clark County said that the system would have the capacity to transport 57,000 passengers per hour and that no taxpayer money would be spent to build the project. Continue. Loop is an all-electric, zero-emissions, high-speed underground public transportation system that is also referred to as the Teslas in tunnels. The company currently operates a small version of the system consisting of 1.7 miles of tunnel beneath the Las Vegas Convention Center. The regulatory approval will enable the infrastructure-focused firm to expand the project and connect hotels as well as other destinations between Allegiant Stadium and the University of Nevada, Las Vegas. Tesla shares... This has nothing to do with Tesla because Tesla and the Boring Company are separate companies. The Boring Company is not yet publicly traded, but they have talked about it. Continue. Central Intelligence Corporation. Twitter's Dorsey dunks on Zuckerberg. So we got some drama in the social media space there on Zuckerberg's reported rebranding plans. Let's see. Facebook CEO Mark Zuckerberg reportedly wants to rename the site as part of his ambitions to create a virtual reality metaverse, and competitors and critics have suggested on what it should be called. The parent company of Facebook, which owns a social media network and other services such as WhatsApp and Instagram, may soon have a new name. The looming rebranding was reported by The Verge this week. The outlet speculates that the corporation wants to have a name that includes the word Horizon, since this is how Facebook's under-development virtual reality platform is branded. Continue. I didn't know that, Julia. That's interesting. They already have tunnels under Vegas. So they might just be using those tunnels then, or expanding them somehow. Harry from Germany, from the same area. Where in Germany? You probably know exactly where I'm from then. Freudenstadt is where I was born. While the Silicon Valley behemoth is yet to confirm the report, yet alone disclose its new name, if there indeed is one, there will be no shortage of suggestions hurled their way, including one from Twitter CEO Jack Dorsey. He responded to a tweet explaining the origin of the word metaverse in a science fiction book, saying author Neil Stephenson was right in his prediction that a virtual world owned by private companies would be a dystopian corporate dictatorship. He then tweeted Central Intelligence Corporation, suggesting it would be a good name for Zuckerberg's brainchild. Let's see the tweets. So there, this Udiverse21 said the word metaverse was coined by Neil Stephenson in the book Snow Crash, and it originally described a virtual world owned by corporations where end users were treated as citizens in a dystopian corporate dictatorship. What if Neil was right? And then Jack Dorsey says, narrator, he was. Let's keep going. Central Intelligence Corporation. Are you serious? You met my dad at church in Schwenningen, so you're right from that area then. That's awesome. It's nice to meet you. Wow.
How bizarre!
Continue. The metaverse has been hyped up by Zuckerberg for several months now. His company announced its intention to hire over the next 5 years around 10,000 people in the EU to work on it. What exactly this metaverse would look like is unclear, but presumably it would be a global virtual reality platform. I'm sure they'll pick a much less ominous name like Wayland-Yutani or Cyberdyne Systems. Where's Cyberdyne from? Cyberdyne Systems, I've heard that somewhere. Isn't that from like a movie or something? Cyberdyne. Is it from Terminator? Terminator, okay. I knew that sounded familiar. Guys. Alright, next. They could just go for evil.corp. That is true. That's from Mr. Robot. Never seen it, but apparently that's an evil corporation. Next. Hut 8 Mining reports purchase of 12,000 new microBT miners for delivery starting January 2022. So Hut 8 has been, I believe they've been on our list to research before. I know that I've looked at them before. It's a Bitcoin mining company, but it looks like they're expanding. We can go to the next article. Exxon debates abandoning some of its biggest oil and gas projects. Remade board of directors. I don't know where oil came from, my goodness. Is debating whether to continue with several major oil and gas projects as the company reconsiders its investment strategy in a fast-changing energy landscape, according to people familiar with the matter. Members of the board, which includes 3 directors successfully nominated by an activist investor in May, and 2 new members have expressed concerns about certain projects, including a $30 billion liquefied natural gas development in Mozambique and another multi-billion-dollar gas project in Vietnam. Oil and gas prices are at multi-year highs, and the world is experiencing a shortage of fossil fuels. Are they? As economies emerge from the pandemic, are they? But it takes years for energy mega projects to produce additional supplies, and more years after that for the investments to pay off. Continue. Luther Corp. Oscorp, yeah. Exxon board members are weighing the fate of future projects as the company is facing pressure from investors to restrain fossil fuel investment to limit carbon emissions and return more cash to shareholders. Environmentalists and some government officials are also pressuring the company to produce less oil and gas. You see, this is interesting. Exxon board members are weighing the fate of future projects as the company is facing pressures from investors to restrain fossil fuel investment, limit carbon emissions, and return more cash to shareholders. How are they going to do that? That doesn't make sense to me. Because if the company isn't investing in new projects, they're not going to be making more money. They're going to be making less. So how are they going to give more money to shareholders? They might want to look into that. Both projects face potential political obstacles, and some Exxon board members have expressed concerns about whether they should return the billions in upfront investment they would require. Some of the people said the board meetings have been cordial. As somebody who's invested in ExxonMobil, I don't think that they should be doing this. They said that they spoke with shareholders and board members, but I didn't get a phone call. So it's actually quite upsetting. Continue. We can go to the next one. So basically, Exxon is doing everything not to produce oil anymore, but still give more back to shareholders. I don't know how that's going to work. Semiconductor supply chain problems are going to take a long time to fix. Commerce Secretary, they should have done this a long time ago. Something that is essential to national security shouldn't be produced in China. Continue. Don't expect the semiconductor shortage to be solved anytime soon. The semiconductor situation is going to take a long time to fix. This one, I feel confident saying, is not going to be fixed in a month or 2 or 6 or 12. Raimondo has been at the center of the government's effort to help semiconductor companies work through their bottlenecks, hosting multiple gatherings at the White House in recent months. Continue. A recent Morgan Stanley survey of semiconductor companies found many agreeing with Raimondo. The September survey of distributors found that a majority of these companies now expect the shortage to persist deep into 22, with 32% of respondents going even further, saying they will last into 23. The report also found that the shortages have intensified in the third quarter of 2021 due to multiple avenues of disruption. The shortage of semiconductors, which had impacted 92% of companies Morgan Stanley surveyed, had delayed production on everything from new cars to computers to a host of other consumer electronics which require the tiny chips to operate. Raimondo says she expects improvements as bottlenecks slowly get ironed out, especially with manufacturing capacity in places like Malaysia. Build factories in the US. I don't understand why they never looked at this, because if I look at this from like a strategic point of view, if there was ever to be a war between, say, the US and China, and Taiwan is the biggest manufacturer of these chips, and Malaysia, it's all within that region where the war would be fought. So obviously, the Pacific region, so obviously there would be disruptions. Then how is the US going to produce chips that they need in smart missiles, that they need in tanks, in computers for tanks, that they need in computers for their vehicles, that they need in communication equipment? I don't understand how this was ever thought out, how this wasn't thought out. Should have built factories here a long time ago. We can go to the next one. JP Morgan warns boom for Bitcoin futures ETFs may come at a cost. I think JP Morgan is just sad because this means they won't be making as much money anymore. Let's see it. Before the game-changing launch of the first ever Bitcoin-linked ETF in the US, plenty on Wall Street cautioned the derivatives-powered trade was no free lunch given the holding costs. But after just 2 days of trading, JP Morgan strategists warned pent-up demand for Bitcoin exchange-traded funds risk distorting the futures market, ramping up ETF investors' costs along the way. Continue. It's a pressing issue as the ProShares Bitcoin Strategy ETF, BITO. Let's take a look at it, actually. See where it's trading today. Down a little bit, down 1.61%. The problem is the cost of continually rolling over contracts held by the fund known as Carry. JP Morgan strategists Bram Kaplan and Marko Kolanovic note that BITO alone already accounts for a quarter of open interest in both October and November Bitcoin contracts, and more ETFs are coming. The futures carry drag and could become even larger if these products gather substantial assets. They will be bidding up both the futures curve further relatives to spot prices and the rolls between contracts, driving a larger carry cost. Since mid-2019, the average analyzed cost for a roll down between second and first Bitcoin futures was about 9%, according to strategists. Between the fourth and second futures was around 8%. So it might cost people more money in the futures markets because of Bitcoin, which made JP Morgan sad. Continue. We can go to the next one. Jobless claims fall to pandemic low behind tight labor market. Workers' filings for initial unemployment benefits fall to 290,000 last week from a revised 296,000 a week earlier. So that's good news. Jobless claims fell slightly and notched a new pandemic low last week. Assigned layoffs remain low as companies struggle to hire workers. Worker filings for initial unemployment benefits decreased to 290,000 last week from a revised 296,000 a week earlier, the Labor Department said Thursday. Claims could return to their pre-pandemic levels by end of the year, said Robert Frick, corporate economist at Navy Federal Credit Union. Employers are clinging to employees given it's so hard to hire, it's hard to retain. Continue. Job openings reached a record high this summer. Though they eased in August, the openings are proving difficult to fill in large part because fewer workers are seeking jobs. The labor force's supply of people working or looking for a job declined in September, separate Labor Department data shows. Americans are quitting their jobs at historically high rates, a sign of higher worker confidence in the job market. About 4.3 million employees quit in August, the highest for records dating to 2000. Wow. I don't know if there might be another reason for that too. Next. Sinema's opposition stymies Democrats' planned tax rate increases. So, Kristen Sinema, the senator from Arizona, is holding up the tax rate increases. Says she won't vote for them. So it looks like the tax rate for corporations might stay at 21%, which is good news. Continue. Senate Democrats are considering abandoning central tax elements of their social policy and climate package as a key senator continues to oppose any increase in marginal rates for businesses, high-income individuals, or capital gains. According to people familiar with the matter, Kristen Sinema, senator, has previously told lobbyists that she is opposed to any increase in those rates, according to a person familiar with her remarks. But her stance is now pushing Democrats to plan more seriously for a bill that doesn't include those major revenue increases. Other planks of President Biden's tax agenda, including tightening the net on U.S. companies, foreign earnings, and enhancing tax enforcement by the Internal Revenue Service, are still on the table, according to one of the people. Ms. Sinema's office declined to comment. Another person familiar with the talks said that how and whether to raise rates remained unresolved because of Sinema's opposition. I thought for sure that they were going to push this through somehow, the increase in the in corporate tax rate, but I guess that's not happening right now. We can go to the next one. I agree, Tiff. That's probably one of the reasons why there was such a high quit rate last month. Fed official says lingering inflation could change interest rate outlook. Fed Governor Randall Quarles says he's watching for signs that higher demand will keep prices elevated even after bottlenecks abate. So I guess there is somebody on the in the Fed Board of Governors that actually thinks. Let's see it. Top Federal Reserve official warned that extending high inflation through next spring could force the central bank to consider raising interest rates sooner than anticipated. Fed Governor Randall Quarles said Wednesday he still expects higher prices to ease next year as bottlenecks and supply chain disruptions fade. If the Fed raised rates in response to recent price surges driven by the economic reopening, the central bank could constrict demand at the same moment that supply bottlenecks abate. Mr. Quarles said during a moderated discussion at a conference in Los Angeles that could lead to undesirably low levels of inflation and employment. The flip side of that dilemma is that transitory doesn't necessarily mean short-lived. The danger for the Fed is that longer-lasting supply chain bottlenecks risk leading consumers and businesses to expect higher inflation in the future, which could force the Fed to respond by raising rates. He cited a related risk from additional government stimulus by the Biden administration that could put pressures on prices by boosting demand. Interesting. Next one. Biden administration is making it easier to invest in sustainable funds in your 401k. So that makes people happy because ESG, environmental, social, and governance. What's interesting to me is that people are willing to sacrifice gains, potential gains in their 401k for their stock to be ESG. And then who decides which ones are ESG? What company is what company is going to be the judge about what companies have proper ESG guidelines and which ones don't? So that'll be interesting to see over the next couple of years how they're going to push this and which companies are the ones that'll be the rating companies. So you've got companies like Moody's and Fitch right now that rate companies, rate their creditworthiness. So it'll be interesting to see how they rate a company's ESG goals, whether they're ESG compliant, and things like that. It'll be interesting. Let's see it. Last week, the Labor Department proposed a new rule that would make it easier for employers to offer investments in workplace retirement plans such as 401ks and 403bs. that take environmental, social, and governance factors into account. So-called ESG funds have increased significantly in popularity over the past few years as a growing base of consumers opt for investments that align with their personal values. But while the funds are easy to find in an individual retirement account or brokerage account, they are currently rarities in 401ks. There are a couple reasons for that. For one, under federal law, 401k providers must act solely in the interest of the plan's participants. ESG funds are still relatively new, so providers did not know for certain if picking them as an investment option would mean sacrificing returns, which it definitely will, or taking on more risk compared with an alternative investment choice, like an index fund that tracks the full S&P 500, which would probably be a better choice. Continue. In recent years, though, more research has come out of the performance of ESG funds, showing that investors aren't necessarily foregoing returns. In fact, the Biden administration's new proposal indicates that ESG factors, particularly the economic consequences of climate change, are actually beneficial for retirement portfolios because they help mitigate long-term risks. Climate change is already imposing significant economic consequences on a wide variety of businesses as more extreme weather damages physical assets. Blah, 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 blah. Continue. Basically, it's a win for retirement investors who believe that ESG factors like climate change or a firm's record on gender and racial equality make a difference in an investment's long-term outlook. Aaron Zapiro, head of policy researcher for Morningstar, an investment research firm, he also says that while one criticism of ESG funds is that they can be more expensive than a typical index fund, the fees have been dropping and will continue to do so, particularly for 401k offerings. A lot of this is a money-making racket, let's be honest. And virtue signaling by a lot of these companies. It's brand new, so we'll see how it works out over the next couple of years, whether ESG is something that works out for these companies. I don't know how a company like Exxon can take these factors into account, cut back on all its investments in fossil fuels. What is it investing in to give its investors the returns that it says it wants to give its investors? So higher returns, but it's not making new investments in fossil or anything like that. Doesn't make sense. Doesn't make sense to me, at least. Maybe it makes sense to somebody else. Next. Real estate platform Picasso accepts crypto assets for payments. CEO says mass crypto adoption well underway. Let's see it. Yeah, it honestly seems like Exxon is going to go extinct. Exxon used to be one of the biggest companies in the world. On October 20th, the day Bitcoin smashed all-time price high, the real estate platform Picasso announced it will be accepting cryptocurrencies via BitPay, the CEO of the real estate firm that helps people buy and co-own a second home. So it's kind of like a timeshare, but not a timeshare. Austin Allison says the firm has seen increased crypto adoption across the real estate industry. The firm Picasso is a real estate platform co-founded by Spencer Rascoff and Austin Allison. Rascoff is well known for co-founding Zillow Group and co-founding Hotwire as well. In October 2020, Rascoff co-founded Picasso with Allison, and the company is considered a real estate platform that makes owning a second home easier by leveraging shared ownership. Picasso's business model is similar to the timeshare model, but it's also a touch different. Continue. Forget timeshares. With Picasso, you own a home. It's not just a block of time. You can book stays throughout the year, not annually, and resale. It's fast and streamlined, and you set the price. Now the firm has decided to accept crypto assets via the Atlanta-based digital currency payment platform BitPay. Digital currencies and blockchains that power them are seeing increased adoption across the real estate industry, and the crypto payment option is a recurring topic in our conversation with prospective buyers of second homes. There was an article not too long ago, I don't know if I shared it on here, of a guy who bought, I want to say the condo was listed at $5 million in Miami, but he bought it for $4 million in Bitcoin. So that, I thought that was interesting. We can go to the next article. Basically, crypto is gaining more acceptance. Russia considers partially replacing dollar reserves with digital assets in the future. these sanctions that the U.S. is placing on various companies or various countries is starting to come back and bite it. In the efforts to counter the negative effects of expanding U.S. sanctions, the Russian Federation is putting an emphasis on de-dollarization. Not just Russia, China is doing the same thing. The purposeful work aimed at limiting the influence of the U.S. dollar on the domestic economy and foreign trade operations is decreasing the sanctions risk. Just for the record, I am for an increased influence in the U.S. dollar. I don't think that there should be a limited influence. I think it should remain the world's reserve currency, because that partially keeps the U.S. economy strong. Challenges associated with these sanctions still remain. Settlements with major trading partners need protection and stability in the context of the currency used. So basically what Russia is trying to do is create some sort of digital currency that they can trade cross-border payments with, instead of using the US dollar, which has to go through clearing houses in the West. So I thought this was interesting. Here, I'll give you a good picture. Good. All right, let's go over the stocks to research for today. Was that the last article? All right. I got two for you today. Low risk. I just bought some more of this company, Walmart. Walmart is an American staple of many portfolios. It's a large company. Revenue growth has been but I think it's still a great company. So Walmart is low risk for today, WMT. I think I've had this one before. I did buy some, I want to say back in May, maybe June. I just bought a little bit more of Walmart. Gross profit and net profit margins are stronger than most of its competitors. It would have little problems paying back its debt. Still trading at around 140, in that range, 140, 150 range. And yeah, so I bought some Walmart. I think that just don't go there late at night. There's things that you see that you won't be able to unsee. But overall, an American staple. Good old-fashioned Walmart. Medium to medium high. So this company has been on our list before. Vale SA. Vale Mining is a producer of iron ore pellets, nickel, copper, coal, potash, phosphates, platinum, gold, silver, and cobalt. It's a Brazilian mining company. It currently has a 19.5% dividend yield. It had a great run from October to July in the stock market, but the stock has been dropping. I don't understand why mining companies are trading at such low prices. Because this company, if I look at it, the fundamentals look good. But I think it's just mainly because of the ESG movement. People aren't investing in mining companies. But mining companies are essential to a working economy, because if you don't have mining, then you don't have iron, you don't have gold, you don't have silver, you don't have all of these minerals and all of these metals that go into manufacturing cars, computers, smartphones. Everything that we use in our daily lives needs mining. And so I think that at some point these mining companies are going to go back up again. Miners are essential. I agree. Mining and miners are essential to an economy. So this company here has seen serious revenue growth over the past 20 years, an average of 20% growth over the past 5 years. It's trading at 4.46x price to earnings ratio, which is way below the average of 30x for the mining industry as a whole. Its price to book value is at 1.92x. Risks would be a global downturn in commodities, which we are not seeing anytime soon. Instability in Brazil, which is tariffs, continued war on the mining industry by climate activists. I think that is the biggest risk that we can see to mining in general. But once people can't buy cars anymore, once they can't buy smartphones anymore, computers, TV screens, whatever else that these minerals and materials go into, then all of a sudden they'll become essential. Just like we're seeing a shift in nuclear energy, where nuclear energy was bad, but now we're seeing all these governments around the world pushing to make nuclear energy green energy so that they can add it into their plans, because they know that if they only have wind and solar and, what else is there? Wind, solar, geothermal, that can make up for the demand in electricity that they need. So take a look at Vale again, Vale SA. I just bought some more of this stock today. The ticker symbol is VALE, Vale. So take a look at this company. I don't know if the 19.5% dividend yield is sustainable for them, but we'll see. So take a look at Vale, see if that's a company that you might be interested in. Take a look at mining in general. I know I said this yesterday, but take a look at some mining companies, see if there's any that you like. So those are the two that I have for you to research for today, Walmart and Vale. Or Vale, or whatever it is. Ram, how do you say that in Portuguese? V-A-L-E. Vale? So Vale Mining, out of Brazil. V-A-L-E, that's correct. And if you'd like to invest in Revival today, do we have that new one yet? Not yet? All right, we might do that one tomorrow then. So we'll do this check the market mug right here that has our diamond hands guy in there. We'll give that to you for a investment in Revival today to say thank you. We'll send that to you. You can do so by hashtag donate on Facebook. You can go to revivaltoday.com and click the Give Now button. You can text RT to 50155. Our Cash App, $RTGive, Venmo at RTGive, revivaltoday.com/PayPal if you would like to give by PayPal. We also accept cryptocurrencies. Right there, if you scan that QR code, it'll take you right to the link where you can give by cryptocurrencies. You can send us a check, Revival Today, P.O. Box 7, Prosperity, Pennsylvania, 15329. And then don't forget to claim your offer, revivaltoday.com/offer. Thanks so much for tuning in. Let's take a look at the market. We're down on the Dow Jones, 100 points. Slightly down on the S&P and up on the NASDAQ just a little bit. Cryptocurrencies. Bitcoin down 64.6. Ethereum still cruising 4,100. XRP 113. Cardano 223. Not too bad. Better than what the market's doing. So go out there and make some money today. It's VALE. VALE. It's not on Fidelity? That's interesting. It should be. It's on Robinhood. VALE. Trading at about $13.15. It's down 5% today. I'm glad I bought some more. NRGU, I'll take a look at it. Let me put it on my list here. I'll probably go over a bunch of those on Monday. A bunch that I'm supposed to take a look at. Awesome. Well, everybody, you all have a great day, and I will see you all tomorrow. Go out there, make some money today, and let me know how you did tomorrow. I'll see you tomorrow.